Time now for our 360 round. We are diving into Oracle's earnings, shares rallying to all-time highs today. Joining us now is Dion Hinchcliffe, Vice President and Practice Lead at Futurum. All right, Dion, thank you so much for joining us today. All right, these shares soaring today. One of the biggest rallies we're seeing since the dot-com era for Oracle. And one of the things I heard before is that you never underestimate Larry Ellison. I know, he's a founder and not the CEO currently, but look, they've shown that they can operate in a new age world. And investors don't seem to care about the myths in terms of EPS and revenue. It's all about the future. What's your takeaway?
Absolutely. I mean, well, part of it is also just Larry's, long-held plan. He's going to get in the cloud. He's going to be one of the hyperscalers. I think that was written off for a long time. But he's growing right now at the very high end of the cloud market. Now on a smaller base, of course, but so the cloud dreams came true. So can the AI dreams come true? And I think the thing that investors are looking at is that backlog, nearly $500 billion, $455 billion backlog for AI superclusters, capacity-heavy cloud contracts. They're seeing all the things getting on the books. That is driving investor sentiment, I think, more than the minor miss they had.
So the guidance for cloud infrastructure revenue, they're guiding for that to reach $144 billion by 2030. That is up from $18 billion this fiscal year. When you think about that growth trajectory, do you think that is sustainable?
Well, right now, despite all the AI hype, the demand is there. The massive data center investments across the industry are there because they're selling the AI. The services are being purchased, and admittedly, a lot of them are other technology or other AI companies that are then reselling those. But right now, the dream is still holding true. It's some call it a bubble. Right now, our analysis says that AI is just beginning, and even though there's a little bit of a trough of disillusionment forming, right now, it looks like this is the smart bet to make.
Okay, so you say your analysis shows that, in other words, we're in the early innings. Is that what you're saying?
We are in the early innings of AI. There is so much more to unfold. We're just now getting into the capable AI that can do what a PhD level human can do. That unleashes lots and lots of business value. The data shows the benchmarks are demonstrating that the time on task, that is how long an AI can actually do useful business work, is gone from minutes to now hours of sustained work. That has a lot of implications for automation, and we're seeing that chief information officers who are controlling all that IT spend in businesses, their biggest fungible budget is AI. After cybersecurity, and so those are the only two big budget items that are growing, and so this is going to drive growth in the industry through 2026 and beyond.
Dion, let me ask you this. So Safra Catz, the CEO, pointed out that they've got these 4 multi-billion-dollar contracts. They're huge, right? As the driver behind the bullish guidance. Do you think that is a sustainable trend? Because there are only certain companies that have deep pockets like that.
Well, and this is where Oracle has a particularly strong strategy in that their core product was really their database, and that is still very popular, very profitable, and they have a multi-cloud strategy where they allow this through partnerships with the top 3 hyperscalers has drove a 1,500% growth in deals in other clouds. So combine that with, I think there is a worry about over-concentration of these deals, so that your whole business depends on a few of these massive AI supercluster contracts. That is a risk, but Oracle also has a nicely diversified business, and they're getting in and using other clouds to grow too. So I think that hedge really allows them to buy off some of that risk. I think the real risk for them is the capex expenditures are really putting pressure on their margins and will continue to do so, even though they're good right now.
Okay, so you say they're good right now. So is that something to be concerned about at all?
They have 47 data centers in various stages of construction. That is going to require very deep pockets. So the margins are good to deliver on that backlog. They're going to have to reach into those pockets and spend, and that is going to be their challenge. I think it's going to put the pressure on the stock price.
All right, shares of Oracle right now up more than 40%. It was already a big outperformer year to date. You add that on to the move so far this year. I mean, it's going to be up more than 70% when all is done and dusted by the end of today's trading day, on track for a record close. Dion, thank you so much for your insight. We appreciate it.